In our country, driving efficiency and lowering cost have been two major challenges to logistics growth. In this context, the government unveiled long-awaited National Logistic Policy 2022, emphasizing the need to cut logistic costs and bring them up to global standards. Now, we will discuss this policy briefly in this DITM and explain in further detail in this week's Third Empire. The National Logistic Policy is focused towards development of infrastructure through ending transport-related challenges, reducing inefficiencies, saving time and cutting cost. Now, it is basically to make our logistics system much more efficient. The policy is also complementary to PM Gati Shakti National Plan. So, the policy has three targets. Number one is to reduce the cost of logistics from 14 to 18% of GDP to global best practices of 8% by 2030. Number two is to improve the country's Logistic Performance Index ranking to be among top 25 countries by 2030. Number three is to create data-driven decision support system to enable an efficient logistic ecosystem. The intention of this national logistic policy are right, but execution will always remain a key in the success. Now, the Indian logistics sector is expanding at a compounded annual growth rate of 10.5%. However, barely 10% of the market as a whole is organized. Now, better tracking and digitization would accelerate the industry's transition to greater organization. Also, the logistic cost in India is far higher than global standards, which is at 8 to 11% of GDP, and the National Logistic Policy is targeting to achieve that. Overall, if implemented properly, the National Logistic Policy will make doing business easier and be good for the economy's infrastructure. Now, it goes without saying that effective logistics are essential for the development of infrastructure, and development of infrastructure is key for India to be a 5 trillion economy. CapEx push plays a vital role that can help the Indian economy to move to a higher and more sustained economic development trajectory. India's post-pandemic economic recovery was guided by public investment, but private investment lagged and was only restricted to certain sectors and top businesses. Let's discuss this. A sample of 811 companies compiled by Business Standard shows us that corporate India's investment in assets like plants, equipment, land and buildings grew 9.1% on an annualized basis in fiscal year 22, faster than 7.4% growth in capex in the last year. However, it remained below pre-pandemic levels seen in fiscal year 19. This shows that private investment lagged and can be attributed to factors such as high inflation, muted demand, subdued business sentiments, and an uncertain global economic environment, which are making businesses a little more cautious about making fresh investments. Now, public sector investment will be at the forefront, while India's private capex cycle has been reluctant to pick up steam. Now, there are several factors that could delay private capex recovery. Global economic slowdown can have a potential downside risk to capex momentum, and any increase in global commodity prices could also create uncertainty and dampen the confidence to make fresh investments. However, once the macroeconomic headwinds does subside and capital utilization levels rises above 75%, the private investment cycle is poised to pick up some pace. So, what does these news mean for you? While we believe that execution will remain a key, the National Logistic Policy's focus to make logistics more efficient and cost-effective is positive for the development of infrastructure. This will have an indirect positive impact on you. Even while there are reasons for optimism in the near term, global macroeconomic headwinds could delay the private capex cycle. This will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.